All right, we'll do the first problem in redemption of debentures. It's a problem, exam problem, Jan 2021. During the year 1920, A Limited, a listed company, made a public issue in respect of which the following information is available. Number of partly convertible debentures issued 1 lakh. Face value and issue price is 100 per debenture. Whole issue was underwritten by X Limited. Convertible portion per debenture is 60%. Date of conversion is on expiry of 6 months from the date of closing of the issue. So within 6 months of issue, it gets converted into a share. Date of closure of subscription lists, 1st May 2019. Date of allotment is 1st of June 2019. Rate of interest on debenture is 15% per annum. Payable from the date of allotment. Value of an equity share for the purpose of conversion is rupees 60, which is face value is 10. Underwriting commission payable is 2%. Number of debentures applied for by the public is 80,000. Right? So your plan was 1 lakh. First line, first point number 1. Your plan was to issue 1 lakh debentures, but the public response is only 80,000. So it is a classic case of under subscription. Interest is payable on debentures half yearly on 30th September and 31st March every year. Pass relevant journal entries for all transactions arising out of the above during the year ended 31st March 2020, including cash and bank entries. This was an 8 months problem. So this is all about issue of debentures and redemption of debentures, and the redemption is on account of conversion, right? Because you will be converting a portion of the debentures into share capital, right? So let's go date wise. What is the first one? You're going to make an allotment to the debenture holders, right? Look at the point number 3. The date of closure of subscription lists is 1st of May 2019. So we are going to allot debentures, right, on 1st of May 2019. So let's go back to the solution part. The entries are already there. I'm going to explain the entries to you. 1st of May 2019. So we will be receiving the application money, right? So bank account debit to debenture application, right? What is the amount? The people or the public have subscribed for 80,000 debentures. What is the face value? The face value and issue price, look at point number 1. It is 100. So what is 80,000 into 100? It is 80 lakhs, right? It is 80 lakhs. So the first entry is bank account debit to debenture application 80 lakhs, right? So that's the, look at the narration. Application money received on 80,000 debentures of 100 each. Okay, that is the face value of the debenture. Now, 1st of May, right, you have got the application and then you are going to allot on 1st of June. Date of allotment is 1st of June 2019. So we are going to allot. Now the point is, the whole issue is underwritten by X Limited. Your plan was to issue 1 lakh debentures, whereas the public response was only for 80,000 debentures, which means the balance 20,000 debentures will be subscribed by the underwriters. So we need to debit them. So what is the entry now? We will say on 1st of June 2019, we will reverse the debenture application of 80 lakhs. So debenture application account debit 80 lakhs. Now we will debit underwriters to the extent of 20 lakhs because they have their own liability. So they have committed to take up some of the debentures because it's an under subscription. So the balance debentures they have to take up. So debit the underwriters account with 20 lakhs. And give a credit to the 15% debentures of 1 crore, or you can say 100 lakhs. So that is the entry. The first entry is on receiving the application money from the debenture holders, from the general public at large. So bank account debit to debenture application, subscription was 80,000 debentures. So 80,000 into 100 is 80 lakhs. Then we will be transferring that to the debenture. But the issue is actually underwritten. So underwriters they have committed to take up some of the debentures or the remaining debentures. So we will debit the underwriters account also. Debenture application account debit 80 lakhs, underwriters account 20 lakhs, to 15% debenture is 100 lakhs. That is the second. So which means we will be allotting 80,000 debentures to the public and the remaining 20,000 debentures will be allotted to the underwriters. Right? So total is 100,000 or 1 lakh debentures. So 80,000 debentures will be allotted to the general public and 20,000 debentures will be allotted to the underwriters. That is the second entry. Now immediately, right, we need to pass an entry for the underwriting commission also. Now what is underwriting commission? Look at point number 4. It says it is 2%. It's clearly given in the problem. Underwriting commission is at 2%. Now the important thing is, should we calculate this commission on the 20,000 debentures, or is it on 100,000 debentures? It is completely on 100,000 debentures. It is only for the act of guarantee we are actually giving the commission to them, right? So the entry is underwriting commission to underwriter. Underwriting commission is an expenditure to us, so we are actually debiting the underwriting commission, and the due credit has to be given to the underwriter's account. So underwriting commission to underwriter. So how do we calculate this? The amount is 2 lakhs. How did we calculate this? 100 lakhs into 2%, because 2% is the commission. What is the total value of debentures? It's 100 lakhs. So 100 lakhs into 2% will give you 2 lakhs. So underwriting commission account debit to underwriter, underwriting commission to underwriter. Now, what is the remaining amount? Underwriters, they have to pay us 20 lakhs. We have to pay them 2 lakhs, which means when you net off these two, what is the balance is 18 lakhs. That 18 lakhs, the underwriters have to pay the money to the company. So bank account debit to underwriters account 18 lakhs. So this is nothing but the difference between 20 lakhs and 2 lakhs. Okay. So that's the difference, because we have debited their account for 20 lakhs and now we are giving them a credit for 2 lakhs. So the net of net is 18 lakhs, which they will actually pay the money to the company. So bank account debit to underwriter's account will be 18 lakhs. Right. Now, very important adjustment is the debenture redemption investment account. Now, if you look at the problem carefully, we said within 6 months of the issue, 60% of the debentures will be converted into equity shares, which means those debentures will be converted into equity shares, which means the balance 40% we need to repay, we need to redeem in the normal scenario, right? Which means if you're going to redeem the 40% debentures, then we need to create a debenture redemption investment account, 15%, right? We need to convert, we need to create that investment account. That is the entry here, debenture redemption investment account to bank. So how do we calculate this? So what is the total? So what is the total number of debentures? 100,000, 1 lakh debentures. Perfect. Face value is 100, correct? But 60% we are going to actually redeem, which means balance 40%. What is 40% is how much is that? Of that, 15% we are going to calculate. We need to make an investment for 15%. So total 1 lakh debentures, face value of the debenture is 100. So 1 lakh into 100, which is 100 lakhs, right? Of that, 60% we are converting, which means the remaining 40% we have to pay. So into 40%, of that 15% we need to make a investment in the debenture redemption investment account. This is as per law. So it works out to 6 lakhs. So we have to make an investment on 1st of June 2019 to the extent of 6 lakhs. So 1 lakh debentures into face value 100 into 40% and into 15%, that will give you 6 lakhs. Right? Very important adjustment. Okay. Now comes the important area on the debenture interest. Look at the point number 6. Interest is payable on debentures half yearly on 30th September, 31st March every year. So 30th September. So let's focus on 30th September. How many debentures we have? We need to pay interest on those debentures. So debenture interest to bank, simple entry. Debenture interest to bank is 5 lakhs. How? Total value of debentures issued is, right, 100 lakhs. Just calculate 15% of that. It's a 15% debenture, correct? So 100 lakhs into 15% for how many months? It is 4 months, because when did we allot the debentures? It is actually on 1st of June we allotted. So June, July, August, September, 4 months. So we need to calculate debenture interest for 4 months, even though they say it is 6 months here. But when did we allot? Debenture interest is payable on 30th September, half yearly on 30th September and 31st March. That is fine. But when did we allot the debentures? We allotted the debentures only on 1st of June. So June, July, August, September, 4 months of interest is due. So we need to calculate. So 100 lakhs into 15% for 4 months, 4 by 12. If you do this calculation, you will get 5 lakhs. That is important. Okay, so that is the debenture interest which is payable for those 4 months period, and that is the 5 lakhs. Right? I hope it is clear. Now, this is the 30th of September 2019. Now what we do? We need to redeem the debentures. Remember, 60% of the debentures within 6 months of issue we need to redeem. Right. Now 31st of October is the date of redemption. Now 15% debentures. So when I say you're going to redeem by conversion, you need to reverse the debenture account, right? And you're going to issue the share capital. Now 15% debenture is 60 lakhs, because out of 100 lakhs, 60% of the debentures will be converted. So it is the value of the debentures which is ready for conversion is 60 lakhs. Now how are you going to redeem that? You are going to issue shares. And what is the value of the share? 60. It's given to us in the problem. Look at this. Date of closure of subscription is on 1st of May. Date of allotment 1st of June. Rate of interest is 15%. Payable from the date of allotment. Value of the equity share for the purpose of conversion is 60. Face value is 10, but we are actually attributing a value of 60 for the purpose of conversion. So we will say, so 60. So if I say 60 lakhs by 60, that is the total value. That will give me the number of shares, which is 1 lakh shares. 60 lakhs is the total value of debentures. If I divide that by the value of a share, which is 60, so that will give me 1 lakh shares. Now 1 lakh shares into 10, that will give me the capital portion, and 1 lakh shares into 50, that will give me the security premium. Remember, face value is 10, the issue price is 60, so 50 rupees is premium. So 1 lakh shares into 50 will give me 50 lakhs, and 1 lakh shares into 10 will give me 10 lakhs. So that is going to be the redemption of debentures by conversion. So we are redeeming the debentures by conversion. So on 31st of October, we pass the entry, 15% debentures account debit 60 lakhs, to equity share capital 10 lakhs, to security premium 50 lakhs. So how many shares are we going to allot? We are going to allot a total of 1 lakh shares. That is very important. And last entry is the debenture interest entry, which is payable on 31st of March 2020. You have to be very careful here. The reason is, the first time when we calculated debenture interest, we did only for 4 months, because June, July, August, September, and that too it was for 100,000 debentures, total 100 lakhs. But now, out of 100 lakhs, we are actually redeeming 60% of that by converting. So balance only 40 lakhs will be available. But look at the dates. Let's be very careful with the dates. When did you actually pay the debenture interest last? We paid on 30th of September. We paid on 30th of September. Now, the most important point is, so when the next debenture interest becomes due on 31st of March, how are we going to calculate the debenture interest? There are 2 ways of calculating. I will explain both the ways to you. Look at the first way. The first one, on 40 lakhs for 6 months at 15%, it will give you 3 lakhs. So I'm just dividing the 100 lakhs of debentures into two categories. One is the 40 lakhs, other is the 60 lakhs. For the 60 lakhs category, 1 month interest is due, right? For 60 lakhs, 1 month interest is due. So that will be 75,000, right? Because in October, 31st October, I am redeeming it. So 1 month interest is due on the 60 lakhs debentures. So for the 60 lakhs, I calculate 15% for 1 month, it gives you 75,000. The remaining 40 lakhs, the interest is due for 6 months. So that will give me 3 lakhs. So if I total that, that is going to be 3,75,000. So this is one way to calculate the debenture interest. So we are actually bifurcating the 100,000 debentures or the 100 lakh debentures into 2 categories. One is for 40 lakhs, other is for 60 lakhs. Interest is due for 1 month on those 60 lakh debentures, which will give me 75,000. Interest is due for 6 months on the remaining 40 lakh debentures, which will give me 3 lakhs. So if I total that, it is going to be 3,75,000. I can also arrive the same number in a different pattern. Look at this. So what I have done here is, we can actually calculate this in a different way. Look at this. First, for the entire month of October, right? You calculate 1 month interest for that 100 lakh debentures. 100 lakhs into 15% into 1/12. So you first exhaust the 1 month 1 month interest on those debentures. So that will give me 1,25,000. And once I redeem that 60 lakhs, the balance will be only 40 lakhs. On that 40 lakh debentures into 15%, the remaining 5 months interest I will get, which is again 2,50,000. So 125 plus 250, that will give me 375. Answer is the same. Whichever way you are comfortable, we can actually do that. Right? It's just a question of how you segregate and how you categorize. It's just mathematics. Both answers are right. Both methods are correct. But the final interest value is 3,75,000. So the entry is debenture interest account debit to bank. Okay. Hope this problem is clear. You can copy this.